Hello and good morning friends, welcome to the CEC-UGC live lecture. Dear friends, as you know that we have started with a new series on financial accounting, and so far we have conducted one session on financial accounting where we tried to understand about the basics of accounting. Dear friends, we would be continuing our lecture further on basics of accounting. We would be starting from the point where we left in our previous session and would be discussing more and more on basics of accounting. And for this discussion, we have again with us in our studios Dr. M.C. Sharma. Dr. M.C. Sharma is Associate Professor in Department of Commerce, Shahid Bhagat Singh Evening College. Dear friends, I would like to tell you all that Mr. M.C. Sharma has authored numerous books, among which few I would like to tell you all. He has written for accountancy for CBSE for class 11th and 12th, as well as he has written a book on management, Sangathan Evam Prabandh. So I would like to welcome our guest, Mr. M.C. Sharma, under whose able guidance we are going to understand the basics of accounting. Hello sir, welcome to the Reset Lecture.
Thank you. So dear friends, in the last lecture we started the introduction to accounting, and those who are new to join this lecture, so I would like to give a quick revision of my previous lecture. We started in the last lecture with accounting. What is accounting? Accounting is the science and art of recording, classifying, summarizing, analyzing and interpreting the business transactions which are of financial nature and reporting them to interested parties. So that is the accounting. So the accounting is the language of business, which is very important for all to know it, the businessmen as well as the people who are interested in the management and all that. Accounting is an information system. It has some inputs, then it processes them, then provides the final output in the form of financial statements and some other statements which are required for the purpose of decision making. The different users which are interested in accounting information are the owners and the shareholders, the management, then the customers, society, employees, government, taxation authorities, researchers. All these people need the data for the different purpose. Creditors and suppliers, they are also interested. Banks and the lenders to the business are also interested in providing the data. They need the data for their own purpose. As far as the objectives of accounting are concerned, so basically its objective is to record, have the systematic record of business transactions, and it also helps to replace the memory because there are large number of transactions which cannot be memorized by the person, and it is also required to fulfill the legal obligations under the different various acts, and they also provides about the financial results and the financial position of the firm. There is one term, bookkeeping. It is the initial job of accountant that includes the recording and classifying the business transactions, and accounting is the wider and bookkeeping is the part of accounting. There are many branches of accounting. The main branch is financial accounting. Most of the people are studying and working on that. We will also concentrate on financial accounting branch. While the other branches are cost accounting, which is particularly useful for manufacturing organizations. There is one branch, management accounting, that is useful for all management people in taking their decisions. And the new branches are also evolving, like human resources accounting and inflation accounting, then taxation accounting, then green accounting, social responsibility accounting. Those who are interested can work on that. Okay. So now we are continuing about this part. So today first we shall discuss the advantages and limitations of accounting, then qualitative characteristics of accounting, then basis of accounting and the important basic accounting terms. So now we start from advantages of accounting. Accounting is systematic record of all business transactions. So it is considered as a replacement of memory. People or businessmen or manager doing business transactions may not keep in mind all the transactions, may not remember in their memory. So if they forget, there may be some problems in business. So one thing is that the people should record these transactions. So accounting provides that. हिंदी में एक कहावत है, पहले लिख और पीछे दे, भूल पड़े कागज से ले. So it shows the importance of recording the business transactions. The accounting also provides the complete and systematic record. Accounting records each and every business transaction which is of financial nature. So it provides the complete record, and accounts are systematically recorded, classified and summarized and presented. So it provides complete and systematic record of all business transactions. It also helps in assessing the performance and financial position of the business. Performance of business is considered in terms of the profits earned by the business organization. So financial accounting prepares financial statement. One of them is income statement. Income statement is also known as the trading and profit and loss account, which shows the profits earned by a firm or any loss incurred by it. We know that main objective of business is to earn profit. So it is very important to know the performance of the business in terms of the profits earned. Secondly, the financial position of the business, that what is the present financial position. For this purpose, the accounting people prepare a statement which is known as position statement or balance sheet. Balance sheet shows one side the capital and liabilities which are outside liabilities, and other side the assets owned by it. So how the assets has been acquired or the funds have been provided to the business, so it shows the financial position. Now the question arises, when total of liabilities is equal to total of assets, then how can a person know about financial position of the firm? Liability side shows the funds provided by the owners and funds borrowed. So if the funds borrowed are comparatively more than the funds provided by the owners, then it may be interpreted that the financial position of a firm is not that sound. Now we need to know comparative study of business. Comparative study of business may be vertical in the form that the different years business performance may be compared. So if we want to compare, we need the data. So what is the trend of our business, what is the trend in the expenditures, what is the trend in profit. So for that purpose, accounting provides the information or the data. And if you see any annual report of a company, you will find minimum 2 years data, that is previous year and the current year. So its main objective is to provide an opportunity to the user of information to compare the current year performance of the company with the previous year. So comparative study of results is also one advantage. Accounting statements also helps in planning and controlling. Planning is one of the very important function for the management. Management has to make planning for the business, planning for marketing department, planning for production department, and different type of other planning for the business. For do planning, although is futuristic about the coming time, but before making any plan, we need to analyze the past data, and this data is provided by the accounting. So data provided by accounting people in the past, that is analyzed and trends are set, then we make the planning for the future. In a business, controlling is very important aspect. Reason being, if a owners or the top management is not able to control their business properly, the targets or the objectives may not be achieved. Controlling is a process of comparing the actual performance with the past planned performance. So when we have a plans, then we have the actual performance. Actual performance record are provided by the accounting people. So the actual performance is compared with the planned performance, and it helps in controlling the different aspects of the business. Accounting also helps in decision making. Management's main function is decision making about the marketing, discount, deciding policies, making any new plan, starting any new project. For all this purpose, they need to get information. If they want to start a new project, so they must assess the present financial position, whether they are in a good financial position, that they will be able to start a new project or their own, or they need to borrow it. So, this information shall be provided by the accounting people. So, the accounting information helps in decision making. Accounting, we have already discussed, provides information to all interested parties. Accounting is also very important from legal matters. In case of any disputes regarding any debt, regarding any other deal or performance of an agreement, in the court or other legal authorities, accounts are considered important documents as a witness. So, it can work as a evidence in legal matters. Then assessing the tax liability. Taxation authorities may ask the person to know whether the tax calculated by a party or paid by a party is the true or not. For that purpose, again they will ask for the accounting books, and they will try to assess the tax liability of the firm. Nowadays, in business, you may find some news that many businesses are sold by one company to other company. Recently, the Renvexi Indian company, which was previously purchased by a Japanese company, has been again sold to Sun Pharma. So, now there is a sale of business. When there is a sale of business, how the different parties shall calculate the value of the firm. So, this accounting statements helps in the valuation of the firm and in sale of business. We know that nowadays the large projects are established, and owners may not be in a position to finance their business at their own. The large scale business is nowadays very big. So, the firm needs to borrow from banks and financial institutions. Now, we want to borrow, we need to tell the banks or financial institution that we shall be able to repay the money. How we can justify this logic, this reason? For that purpose, the banking people or the financial institutions ask for our financial statement. From the profit and loss statement, they try to see whether our profits are sufficient to pay the interest and the loan installments in future. And our financial position is good, so that their debt, the loan amount is the safe. So, the financial statements prepared also helpful in raising the loans by the firm. Many times there are the reports of the errors and frauds in the different firms. How these errors can be detected, how these frauds can be detected. So, for that purpose, again the accounting books are to be audited or the vouched. Nowadays, to check the accounting information, a new branch of accounting has come into existence in India also after the Satyam company fraud, that is called forensic accounting. Although this forensic is the science term, but now we are using it in accounting, the sensitivity of the different account items and terms, so that we could try to know what is cooking in the firms, whether something is wrong or not. So, the accounting records can be verified, investigated to detect the errors and the frauds. So, we know that the accounting is very important and used by all the firms. But accounting in itself is not complete. There are some limitations of accounting, and that we need to keep in our mind before analyzing and interpreting the financial statements and taking any decision. And one aspect is the incomplete information. Although we are telling that complete information is provided, but that is financial information. because all business transactions and events of financial nature are recorded in accounting books, but non-financial information, which is also called qualitative information, is not disclosed. For example, qualities of the management people, reputation of the business, management labor relationship. If there is a strike, then it will not be recorded in accounting books. So, it means some non-financial events and informations are not disclosed in accounting books, which may also affect the decision of the information user. Then second limitation is personal influence of accountant. Many items are there which are estimated or valued by the accountant on some basis. One example is the inventory valuation or the valuation of the closing stock. There are different methods are used for valuation of closing stock. One is called first in first out, another is called last in first out, some may be simple average method, weighted average method. So, we find there the discretionary power of the accountant. So, the accountant may influence the valuation of his stock. So, these are some information, some area where accounts pose the limitation. Similarly, in case of the calculating depreciation on the fixed assets, one accountant may say that 10% depreciation on machinery is sufficient, while the other accountant or other people may say no, it should be 15%. So, here is some dilemma or some influence on the accounting information. Other is the inexactness. Although we record and measure the accounting transactions in terms of the money, but some items are estimated. So, the assets may not be shown at their real value or the market value. Just for example, depreciation is an estimated amount calculated on some basis. So, the book value shown in the balance sheet of a firm does not necessarily reflect the market price. So, may not be the real price. All the accounting information is prepared on the basis of the actual figures. So, it is based on historical costs. Suppose one building was purchased the 5 years back for rupees 10 lakh, and it may be the market value today may be the 20 lakh or 25 lakh. So, the information is not reflected in accounting books. So, most of the fixed assets are shown at the cost less depreciation. So, it does not show the market value. So, it is based on historical cost. So, price level changes are not affected. Although there is a separate branch has evolved which is called inflation accounting, if it is considered important to convert the historical accounting books into the present value system, so then inflation accounting can be used for that purpose. Then there is one term which is called affected by window dressing. What is this window dressing? Although the literary meaning of window dressing is that decorating a window of a building to show the house is very good and good enough, but inside the story may be the different. Similarly, in accounting, some people may use to manipulate the data to show the very good picture of the firm's profitability or financial position. So, sometimes these manipulations may be found in the accounting books. It has been in many cases. Many national level companies like Satyam and international firms, the Enron and some other companies have failed. So, just it was because of that their data or the figure were manipulated, and we could say that the window dressing was used in accounting. Then accounting, we say that it is used for future planning, but always it may not be helpful in forecasting the figures for a business. Past is not the in any indicator of the future performance, future circumstances may be different. So, while forecasting, the people has to consider many other factors. So, only accounting may not help in the that way. Now, as we know that accounting is information system, it provides very important information, but the question arises, how can we ensure that the accounting information is very useful in decision making to the different parties? For that purpose, the accounting information must have some qualitative characteristics. One important quality required is reliability. Accounting information must be reliable. So, any user can rely on the information, and to have the reliability characteristic in accounting, some features or important aspects are important. One is faithful representation. The information must be factual. It means that the transactions which has taken place actually, then that should be the accounts should be the factual information. So, only actual transactions taken place should be recorded. So, another is substance over form. Form basically represent the legal form, and the substance is the importance of the information. So, when we are representing the transactions or recording the transactions, so their importance or substance should have the priority, only legal form should not have the priority. So, if we do not consider the importance of the data and should represent only in the legal format, then it may not be useful for the decision makers. Third aspect is neutrality. We have already studied in as a limitation of accounting that the personal judgment or the data may be influenced by the accountant. So, this limitation should be avoided. It means that the financial statements should be prepared and on the free from bias. They should not be made in favor of any particular group, like in favor of the management or in favor of the owners. So, the data should not be manipulated, there should be neutrality. It has been some cases where the firms do not want to pay more to their employees, so they are trying to show the losses in the firm and avoiding the wage increase. So, the neutrality is very important to show the reliability. Then prudence. Prudence is that use of the rationality, the professional judgment when used in adoption of accounting policies and estimates. So, the accounting policies should be prepared on some scientific basis, and so that they reflect the correct results and they are comparable. Completeness is also very important. All the information should be shown completely. Just for example, there is a loss of goods by fire, but it has been shown in the books as a loss of goods only. Then the people may not understand due to what reason the goods there was a loss of goods. If it is loss of goods by fire, then it will indicate that the firm has not insured the goods. If it has been insured, then the firm could get the claim from the firm. So, it affects the decision making or utility. So, completeness should be there. Another very important aspect is relating to the timeliness. Accounting is an information system and it is used for decision making. So, if the information is available timely, then it will have the good decisions. If information is delayed, it may affect the decisions. So, the timely providing the information is very important. So, nowadays you will find that as soon as any quarter is completed, all those companies which are listed on the stock exchange, they try to provide the quarterly results through newspaper, through their websites, although it is compulsory for them due to the SEBI guidelines. So, timeliness so that the investors and other people who are concerned with the company can take decisions. To make the data reliable or accounting information reliable, verifiability is also very important. Verifiability means the accounting information can be verified by any independent person other than the accountant. We know that the many companies has the all companies has the compulsory audit, some partnership firm also, and these auditors, basically chartered accountants, they verify the accounting records through the source documents or the different other vouchers or other evidences that the accounting transaction recorded in the books is the correct amount and correct account has been recorded. So, the verifiability is also very important. So, if accounting information has all these features, then we could say that accounting information is reliable. Another important aspect of accounting information is relevance. We know that accounting information is used for the purpose of decision making. So, the relevant information should be available. If information is relevant for the user in decision making, only then it will help to analyze the past, present and future events. Now, the question arises, how the accountant should keep in mind this relevance feature or provide. For that purpose, there is one materiality concept, which although we shall study in detail in later on, but now the materiality means any important information which may affect the decision of the information user. So, all material information should be disclosed in accounting books, they should not be omitted. Sometimes there are a dilemma for the accountant or the information providers. Okay, which information should be disclosed, whose priority should be made. If we say the full disclosure, the each and every information should be provided in accounting, then if all information is publicly available, then our competitors may also know about our business secrets and they may use against the firm's interest. So, therefore, it is again very important before disclosing any data, we should keep in mind the needs, whose needs is priority for us. So, our priority for the accountant is to the priority of the shareholders and management, the main concerned or stakeholder parties. So, our competitors are not concerned with that. So, many information may not be disclosed in that way that the other people may use it against the firm. Other than reliability and relevance, understandability is also an important feature of accounting information. Accounting information must be presented in such a manner, in such a format that users can understand without having any expert knowledge of accounting. And I would like to say that if you go through all these our lecture series, then you may be able to understand the accounting data, although you may not be expert in accounting. But if you understand some basics of accounting, then you could easily understand the accounting information provided by the companies through their financial statements. Financial statements, some notes, some graphical presentations are provided. So, the presentation is made in such a way. Many companies, if you see annual report, you will find profitability graph. So, by seeing the profitability graph, you could know easily that the profitability has been decreased or increased in comparison of the previous years or the past years. So, all accountants must present the accounting information, so it can be easily understood by the people, although they may not be expert in accounting knowledge. Now, the comparability. We have already studied one aspect in advantages of accounting, that accounting provides comparative study of the results or information. How the accounting information can be made comparable? If we want to compare one firm's accounts with another firm, then how can we compare? Their accounting policies may be different, their inventory valuation method may be different, their different accounting practices. For that purpose, it is expected that all the firms should follow generally accepted accounting principles, which are also known as the GAAP, GAAP. This is the core of accounting, which we shall study in detail after this lecture. So, if all the firms are following the same accounting principles, then definitely the accounting information can be easily understood and compared easily. Now, the accounting principles are not compulsory or the mandatory for all the firms. So, to make the data comparable, every country have their own accounting standards. In our country also we have Indian accounting standards, which are issued by the Institute of Chartered Accountants. So, if the companies are following, so now all accounting standards have been made mandatory. So every company has to follow the accounting standards. So if every company is following the same accounting standards, then definitely the data can be easily compared. In case of the multinational companies has to follow International Financial Reporting Standards, which are known as IFRS, so that the data can be compared internationally. It means the one country's firm can be compared with other country. So if the accountants are following as per their need the GAAP accounting standards and the IFRS, then data will be compared. Another practice which is expected, that is the uniform practices to be followed by the same industry. It means all the companies and the firms in the same industry will follow the same practices. So when their practices are same, then only their data may be comparable for the purpose of decision making. So these are the 4 important qualitative characteristics, that is reliability, relevance, understandability and comparability. These all 4 characteristics are must in accounting information. Only then the accounting information will be very effective and provide the quality information to all the users. Now, when we do accounting, if you see that some NGO, some chartered accountant, the income statement prepared by them is different from the other people. Why it is different? There are 2 bases of accounting records. These are cash basis of accounting and accrual basis of accounting. Now we shall study these both. Both are used in, so we must know the both. The first is cash basis of accounting. When a firm is using cash basis of accounting, the income is calculated on the basis of cash transactions only. The credit transactions are not considered at all or they are ignored. Similarly, expenses are recorded when paid. If expenses are not paid, they are not considered while calculating the income. And due to this reason, as we are using the cash basis, no adjustments are made for outstanding expenses and accrual incomes. And this basis of income or profit is calculated generally on the basis of receipt and payment account. But business firms are not using. This method is normally useful for professionals like doctors, advocates, chartered accountants. Why this is useful for them? Because the credit income is of doubtful nature. If they have provided services to a person and who has left, the doctor has provided and who has not turned up again, so it is not necessary that doctor will get the payment. So the professional people, as they are not sure of their accrued income receiving that, so they prepare their financial statements on the basis of the cash basis. The another basis is the accrual basis of accounting. In accrual basis of accounting, all the incomes are considered. Incomes are considered when they are earned or accrued. Whether received or not, it is not necessary. For example, on 25th March, a business firm has sold some goods. The payment shall be received in April. So now it is a question whether this income should be considered as income or not. The accrual accounting system say it should be considered because the income is recognized whenever the claims are there. Now the firm can claim for their payment against their customer. So the incomes earned shall be considered. So if there is any income which has been earned or accrued but not received, these are considered. So to understand this, the adjustment shall be made for accrued income and the incomes received in advance. Just for example, a building has let out by a firm and the rent for the April has been received in the March. So this rent received for April is not the income of current financial year. So an adjustment should be made for that. It means it is deducted from the income of the current year. So, it is the adjustment for income received in advance. But if a part of building, the rent for the March has not been received in March, it may be received later on, it will also be considered because it is the accrual income. When under accrual system, whether income is received or not, it will be considered in the current year. Similarly, expenses are recorded when they are incurred. Salary for the month of March has become due, it will be recorded in the month of March, not in April when it is paid. So, the expenses shall be recorded in accounting books whenever they are been incurred, means a liability have been arose. So, to consider this, adjustments are to be made for outstanding expenses, means expenses due but not paid, and expenses paid in advance, that is the prepaid expenses. So, any expense which has been paid in advance, it should not be considered in the current year because it does not belong to the current year. So, accrual basis considers incomes and expenses for the current year at the point of incurring or earning. Whether they have been received or not, it is not important. Under this method, to calculate profit or loss, the income statement and profit and loss account is prepared where these adjustments are made. So, the profit and loss accounts for a business firm is prepared after considering the adjustments for outstanding income, outstanding expenses, accrued income or income received in advance, and prepaid expenses. All the business firms are required to maintain their accounts according to accrual base of accounting. For companies, it is compulsory under the Companies Act that they will maintain their accounting books or prepare financial statements on accrual basis of accounting. Although it is not mandatory for the small firms or other business firms, but most of the firms follow the accrual basis of accounting. So, now sometimes a question arises that which method is better. It is not a question that the which method is better, but both the methods have some of their advantages, merits or demerits. So, their suitability we have already discussed, that for professional people, due to the reason that income outstanding is doubtful whether they will receive it or not, so they use the cash basis, and the business firms use the accrual basis. So, in both the recording of transaction is different. In cash basis, transactions are recorded on cash basis only. It means when income is received, when expenses are paid. While in accrual basis, incomes when earned are recorded and the expenses when incurred are recorded at the same time. Adjustments are to be made in accrual basis for outstanding expenses, prepaid expenses, accrued income and income received in advance. And in accrual basis of accounting, the capital incomes are differentiated from revenue income, while in case of cash basis of accounting, this distinction is not considered. Legally, we already told that this accrual basis of accounting is the legal which is recognized by under the different acts and particularly for the companies. After studying all about this accounting, what is accounting, what are objectives, what should be the qualitative characteristic, how it is useful. To understand the accounting, the most important aspect is understanding some important and the basic accounting terms. As we know that already many terms have been used, and those who belong to the non-commerce stream may not be understanding those terms. They may face some difficulty in that. So, now we would like to explain some important accounting terms which are frequently used. One term we are using, transaction. In accounting definition, we told that all business transactions and events are recorded. So, what do we mean by a transaction? transaction involves exchange of goods and services on cash or credit basis. So, whenever a firm is buying the goods or selling the goods, it is a transaction, whether it is on cash basis or credit basis. And it involves transfer or exchange of value. It does not mean that the goods to goods transaction or exchange of goods against another goods is not a transaction. That is also a transaction, because it is the exchange of value. In markets, many times you find exchange scheme for different electronic items, that exchange your old TV against the new TV. So, only cash payment by you is not a transaction. The value of your old TV exchange by you is also the part of business transaction. So, transaction is a transfer or exchange of value, whether it is on cash basis or credit basis. Another important term which is normally confused by non-commerce people, that is the goods. What is a good? Good may be anything, anything that in which a firm deals. It means it has a relative meaning. For a furniture dealer, furniture is goods, while when it is purchased by a software company, the furniture, it is the asset for him, because it is not dealing in the furniture. So, to understand the goods, we must understand that the goods means anything in which a firm deals. It means it purchases for resale or manufactures it. It may be raw material also, because in manufacturing concerns, they buy the raw material, process it and prepare the finished goods. So, the goods may be raw material or finished goods, but the important aspect is that the firm is dealing in it. It means it has the frequent transactions for the purpose of business. If you are buying any item for its own use, then it is not a good, it is an asset. So, the goods is very important, because we record all transactions of goods. The one term which is used, that is purchases. Purchase, the normal meaning is that anything you are buying, it is a purchase transaction. But from accounting point of view, the term purchases is used only for purchase of goods. So, when we prepare a purchase account in accounting books, it is reflecting not all purchases. It shows only purchase of goods by the firm. Similarly, another account is used by the firm, that is purchase returns. Purchase return is the goods which has been returned to suppliers. Many times when a firm buys the goods, it may not be according to the order placed, it may not be according to the specifications, its quality may not be up to the mark, or excess quantity may be supplied. So, in all these cases, the firm has to return the goods to the supplier. So, this goods return to the supplier is recorded in purchase return account. So, purchase return shows the goods returned to the suppliers. It is also called returns outward. Returns outward means outward of the business. So, we are returning to the suppliers. Now, the next term, which is the sale. Sale, the term in accounting means the sale of goods only. In trading concerns, it is the sale of goods which is purchased for the purpose of resale. In case of a manufacturing firm, it will be the sale of its product which are manufactured. So, sale, if any furniture is sold, then it is not be shown in the sale account, because the sale account represents only sale of goods. Similarly, another account is prepared, that is the sales returns. Sales return is also called returns inward. When our customer returns the goods to us due to any reason, then it will be recorded in sales return account. So, thus we see that there are these four terms: the purchase, sale, purchase returns and sales returns. These all four account reflects the transaction of the goods. These 4 accounts has been prepared so that the information has been presented in the systematic way or can be easily understood, data can be provided easily. Now, voucher. Even you do not belong to the accounting branch, but sometimes if you go for some work in any company on the or any other basis, or you are a regular employee, you have to get the salary. So, the accountant will ask you, please sign the voucher. What is this voucher? Voucher is a document which provides the evidence of a business transaction, which is recorded in accounting books. We have already studied that the accounting information must be factual and reliable, verifiable. So, if a accountant records salary paid to Mr. X 15,000, but no evidence is available, we have paid in cash, no receipt has been taken by the from the employee, then it is questionable whether salary was paid or not, or it is a fake transaction put by the accountant. So, therefore, the voucher is used for every transaction. A separate voucher is prepared mentioning the details of the transaction, whether amount paid, on what account it has been paid, to whom it has been paid, in cash it has been paid, or check, or any other way by money transfer, net banking. So, all these information are mentioned, and which account should be debited for a business transaction or should be credited, it is also mentioned in it. All these vouchers are prepared by the accountant of the firm, and they are also countersigned by some senior officer or his boss, authorized person. He may be the manager level or any other higher person. When we prepare the voucher, we should also try to support them through some source document. For example, we purchase the goods and we record it through the voucher, but when we buy the goods, we must get a cash memo or a bill from the supplier. So, that could be attached with the voucher, so it can be verified the goods purchased recorded is as per the actual amount purchased. So, these are the source document. There are many source documents like cash memo, bill, receipts, pay slip, check. When you go to the bank to deposit a check, normally you have to fill a form which is called pay slip, in which you mention all the details, your account number, the check's detail, date, amount, check drawn on which bank and branch. So, this pay slip works as a voucher in the bank to recording the deposits or crediting your account by the deposit amount. So, there may be the different source document for a transaction. Even if there is no source document, then voucher shall work as a source document. A standard format of voucher is used in the different firms. Normally, the printed voucher pads are available in the market, but some companies may design their own format. They can get their printed, their firm's name is printed on that. So, the voucher format may be there. The voucher format may be the single entry basis, like in bank you find only debit voucher, credit voucher, while in firms normally a voucher which shows the two aspects of a transaction, which account to be debited and which account to be credited. So, the voucher is the basis of recording a business transaction. In business, we talk of the assets and liabilities. What do we mean by assets? An asset is anything of value owned by an enterprise or a firm, or right to get cash or benefit in future. A building, a furniture, a machinery, a car owned by a firm is of value, so it is an asset. Right to get cash. If we have sold goods on credit basis, then the debtors or a person's account shown as the amount receivable from him, it is also an asset, because the firm has right to get cash or some future benefits is to be derived. Like in case of the prepaid expenses, the benefit will be derived in the future. So, this prepaid expenses is shown in the balance sheet as an asset. So, it is a resource which is valuable, owned by the firm, and it is acquired at a measurable cost, because any right or any asset is to be acquired by the firm against some payment or consideration. So, that is a asset. Many examples, as I told you: land, building, plant, machinery, debtors, bills receivable, furniture, motor car. So, these are the different examples. Now, we see the different type of assets. On the basis of their use in business, the assets may be classified as fixed assets and current assets. Fixed assets are those assets which are purchased by a firm for operating the business and not for resale. They are acquired by the firm for permanent use in the firm. So, land, building, plant, machinery, furniture, motor car, patents, trademarks, all these assets are considered the fixed assets. More than 1 year, their utility or the benefit to the firm. Some assets are known as current assets. Current assets are basically kept for the short term, and they are required for day-to-day business activity, like stock of raw material, semi-finished goods and finished goods, debtors, bills receivable, cash in hand, bank balance. These are some of the examples of current assets. There may be some marketable investments which we can sell whenever we need. So, the assets may be classified into two categories: fixed assets and current assets. Fixed assets required by the firm for more than 1 year, long term we could say, and current assets normally converted into cash. So, they are also known as the floating assets or operating assets. There is another classification of assets, that is tangible assets and intangible assets. Tangible assets have the physical existence which can be seen and touched, like building, machinery, furniture. In business, there are some intangible assets which have no physical existence, cannot be seen or touched, and the common examples is the goodwill of a firm. Goodwill is considered normally the reputation or the profit earning capacity of a firm. So, that goodwill is also the asset because it could be sold in the market. Then patent right. Patents are normally a right on any product or any processing which is registered by the inventor in their name. If you buy any medicine, you will find on its pack the patent rights reserved. So, these patent rights are also purchased and sold. So, these are also asset. This is the intangible asset. Copyright. Copyright is used in case of the authors or any advertisement, also any design. They have the copyright over the design or over the content for the purpose of the reprint and the commercial sale. So, copyrights are also purchased and sold. So, they are also as an asset. Then trademark and brands are also have their value and they can be purchased and sold. Recently, a product Savlon, which was owned by the Procter & Gamble, this product mark has been sold to ITC company. So, they are in the form of the asset. So, they are intangible assets. Other than these, some assets are liquid assets we call. Liquid assets are those current assets basically which can be easily converted into cash or at a short notice. So, cash in hand, bank balance, marketable securities, debtors and bills receivable. These are the important examples of liquid assets. Another type of asset sometimes we listen, that is fictitious asset. The term is in itself has some meaning. Fictitious asset. Asset means had some value, fictitious means some artificial. It means that in accounting, there are some items which are shown as asset in the balance sheet, but they do not have any market value. They cannot be sold. In some balance sheets, you will notice the preliminary expenses or previous year accumulated losses on the asset side or some deferred revenue expenditure. So, all these items, although they are shown as asset, but they are not real assets, they cannot be sold in the market. So, they are called, although shown in books, but fictitious assets. They are normally written off over the period of time. Many new terms are left, and we shall continue in the next lecture the other terms left. And I hope you should give your feedback. Any item has been left out of the discussion, then your feedback will provide me an opportunity to explain those terms or those accounting concepts. Thank you.
With this note, thank you, sir. Thank you so very much for giving us in-depth knowledge on basics of accounting. So, in our future sessions, what we are going to discuss further?
First, we shall continue with some other important basic terms which have been left. Then we shall start the theory base of accounting, that is accounting concept or accounting principles.
Definitely, we would be discussing on all what Mr. MC Sharma has said. Dear friends, I believe that you might have liked this lecture, and if you want to have more lectures on basics of accountings, or if you have any kind of queries, then you can mail us at info.cc@nic.in. Sir, because we have some time left over here, now my question here is for the students who might be watching us right now. What are the scopes for the students who are studying accounting? Because when a student learn a particular subject, then he has only a query that does we have a future prospects, but does we have a future career in that particular subject?
Any business firm, whether it is a small, medium or large, they need to appoint the accounting people, because all business transactions are to be recorded. Owners don't have the time or the knowledge of recording. So even the small firms, they are using the part-time accountants. So if you have the accounting knowledge and you are unable to adopt it as a full-time profession, so you could adopt it as a part-time profession also, in the evening or the 1 day in a week, 2 days in a week. So the accounting is such an area, even you have the basic knowledge, you can update yourself easily, and the basic accounting is done by all the people. Although you may not have the professional knowledge at the senior level, but the starting is very good. Just for example, in informal discussion I told you, after my 10th class I started doing accounting job as a munim in a firm, because I have the knowledge of accounting. So I went to the firm and told me that I am interested in accounting job. In particularly the grain market, there is a very heavy season during the April, May, June, the heavy crops are there, the workload are higher. So they appointed some part-time accountant during those period. So I got an opportunity as an accountant or the munim. So it continued to me to do this part-time job during my student life and earn some money. And accounting, even you are the after class 12th passed, there is one course which is called ATC, Accounting Technician course. It is done by the Institute of Chartered Accountants. You don't want to become CA, but you want to become the accounting person, then you can register yourself with the Chartered Accountant Institute. For this course, you have to qualify only the 4 papers of accounting, and you will be given a designation Accounting Technician course. So ATC, they are eligible to do the accounting job in the various firms. So it increases their profile. Even if you are going to become a manager, the accounting knowledge is very important, because all controlling are done through accounting aspects.
Definitely, I hope that all the students who might have heard this would have got another career perspective from Mr. MC Sharma. Dear friends, we would be keep updating you through our EduSet lectures so that it becomes easier for you to study your course material as well as to find the future prospects for you. So we would be meeting again very soon and would be discussing more on the basics of accounting. Till then, take care. Goodbye. Thank you, sir. Thank you so very much.